Okay. Um, Hello, and thank you all for joining us today in this webinar with Orbix.com. And in this webinar, actually, is going to be a little bit like complex. We're going to talk about a lot of things that happened recently and for the month ahead, and what exactly that you should keep an eye on over the next few days, also a few weeks, as we head into September, which is expected also to be a very interesting month, also especially for Europe. But before we start, also let me take you just back to what happened over the past few days and what's happening actually today. Um, if you have any questions during the session, you can ask for it, and you can just write it, and I'll answer it accordingly. Again, just one more time, can you hear me loud and clear? And is the screen is clear too? Okay, that sounds good to me. Okay, that's fine. Fine. Let's begin with first of all of what's happening right now. So I'm going to put up the screen and talk about a little bit of each thing. Let's take a look at the screen, which is the big screen, and then I'm going to let you know what exactly I'm talking about first. Okay. So here, right now, in front of you, you have that's my market watch screen. Usually, this is what I follow almost on a daily basis. Of course, we're talking about multiple asset classes here, but starting with the euro right now is what 18.17. We had a huge, major sell-off in the US dollar, which is right now the dollar index is trading about 93.06. The British pound is above 129. One of the most important currencies that we are still watching is the Japanese yen, which was one of the main reason why again today in the morning we said that risk is still to the downside in Japanese yen, which means that safe haven assets is likely to show more and more gains in the next few hours. And this is actually what happened because the Swiss franc is also 96.06 right now. We had gold all the way to right now is at session high at 12.92 after the trying to break above the 1300 last week. And silver is above 17, almost 1% up. Not that much anyway for silver. We're talking about here oil, Brent and West Texas is also at lows with more than 2% for Brent. That's actually too much for Brent in one day after rising by more than 3% on Friday. Here we have the DAX index. We have also S&P not really doing well that much today also. And the US 10-year yield is at 2.18. So let me just summarize a little bit of what happened actually, first of all, last week. And we will start here with a little bit about let's take a look at the dollar index because dollar index is one of the main things that I always follow on a daily basis, and also most of my medium term trades is basically built on this chart. So if gold gets up, CHF gets down. I'm gonna let you know about it like exactly. I'm gonna talk about it just in a little bit, but let's start with the dollar index a little bit. So one of the things that actually we have been watching over the past few days, or the past few even weeks. So it's the US dollar index, and why? Because we have been declining since the beginning of the year, or if you want to also call it since the beginning of Donald Trump's presidency. The dollar index has been declining for 5 months in a row, and now this is the sixth month in a row that the dollar index is losing value. If you look at the monthly chart, there you go, that's the monthly chart. So we have from March, April, May, June, and July, and now we're almost approaching also August to be in red. We still have like almost 9 days to the end of the month, which means like a little bit of maybe 5 to 6 business days. But it looks like we're gonna be going for another low very soon. One of the most important things that we also told the clients over the past few weeks that traders need to keep an eye on a very important area between the 93 and the 9180s. And why this level and why exactly this area? Because looking back from 2015 until today, this area here has been very supportive for the US dollar index. We've seen it in 2015 after the breakout. We've seen it in 2015 in May after the breakout and after another retest. We saw it in August. The same thing we're seeing at the same time from August. Also, May of 2016, and the same continues also May, June, and now we're testing this level after 5 months of consecutive decline, and maybe including this month will be the sixth consecutive decline. But so the first week when we actually approached this one, we had a very quick bounce, which is a very important bounce to keep an eye on, because this when we were saying that at least another short-term retracement is needed before the downside trend continues. First of all, let's talk about why the US dollar declined over the past 5 months, despite the fact that the Federal Reserve raised the rates or the Fed fund rates many times this year, like almost 2 times. But one of the main reasons why the dollar is declining is because of the new administration in the States, or the US administration's plan or the economic plan that they would like to implement. They haven't implemented anything yet, but they are still thinking to implement the economic plan to bring back the US companies and to start exporting goods from the States, which would be a little bit kind of like almost impossible to be done in few years. But one of the main reasons for the dollar decline is because of the US administration economic plan. However, looking back again into technical analysis here, for the past 1, 2, 3, 4, 5 weeks, and even especially for the past 2 weeks, the US dollar index tried even like to retest the level of 94.50s, which was also confluenced by another resistance area back in August of 2016, but it failed. The candle that you're seeing here, I'm sure maybe most of you knows about this candle, which is a reversal candle to the downside, and it actually continues during the day. If you look on the daily chart here, how do we scan this one? Oh, sorry. Yeah. If you look at the daily chart here, so after the breakdown, one test, the second, and the third, it was a decline here and continued all the way down. It tried to retrace all the way back up, but then failed. Another failure was during last week, 15th and the 16th of August, and now we're continuing to decline. So for the time being, maybe if you look at it like from a very simple technical point of view, a trend line is already, we can say it is already broken, but now it's time for us like to see more downside ahead. One of the things and one of the important things why the US dollar like failed last week, did any of you follow the FOMC meeting minutes last week? If you know what happened exactly and why the US dollar declined, that would be good. If not, you'll have to start reading the meeting minutes still. The question again, have any one of you read the Federal Reserve statement last week or the FOMC meeting minutes statement last week, and why the US dollar actually declined? Okay, we might be in a serious trouble a little bit, but that's okay. Fine. The Federal Reserve again last week, everybody was expecting the Federal Reserve to come in with a very kind of like positive tone because of what happened during the US jobs report at the beginning of this month. Also, the retail sales that came in much better than expected. Some of the economic releases came in much better than expected. So everybody was thinking, okay, September might be the month where the Federal Reserve will raise rates. However, the Federal Reserve came in with kind of a surprising, Homero, the evaluation of the rates are paused because of inflation. Well, that's right. That's totally right. The Federal Reserve, it was actually 2 statements. We had live coverage somewhere, and it was just very easy to spot it during the meeting minutes. The headlines was like, it was saying the majority of the Federal Reserve Council thinks that the Federal Reserve should hold on the next rate hike until we see some sort of a pickup in inflation or some improvement in inflation activity. At the same time, they said also that many of the members sees that the Federal Reserve, or they're surprised why inflation is not even rising, despite the fact of all of the Federal Reserve also measures over the past few months. This is actually true, but we all know that inflation figures are not actually accurate, and they are very volatile at the same time. So this was enough for the market to understand first two things. The first one is the Federal Reserve will not be able, or to be more clear, that September's rate hike is off the table. It's not going to happen anytime soon, or at least in September. Even if the numbers comes in, like from now until September, even if the numbers comes in with the positive readings, it still will not grant the Federal Reserve to raise rates in September. Number two, another sign from the Fed statement was that the Federal Reserve might not be able even to start trimming its balance sheet, because trimming its balance sheet means that they're going to take the dollars off, or like they were going to take out more dollars from the market, which means inflation is not going to be going up. That's why they will try as much as possible to keep the money in the market to keep the money supply in the market. This is one of the main reasons. However, if you look at again now the US dollar index from a weekly point of view, I'm still looking at the same area, which is between the 93 and the 91.80. This is the area that I would like to keep an eye on over the next few months, because over the next few weeks, because I need a clear breakdown below the previous low, which is 91.80, almost 91.90, before even saying that the medium term to long term of the US dollar index is now lower, or is now bearish, or is now negative. Other than that, there might be, for whatever reason, another rally from here. We don't know. We look at the numbers, we look at the economic activities, we look at the activities in general, and then we assess what might happen over the next few weeks. So for the time being, from a technical point of view, first of all, fundamentally, the Federal Reserve is not able to raise rates. That's number one. It was confirmed by the Federal Reserve, or by the FOMC meeting minutes. That's number two. This means that the US dollar trend remains on the downside, but at the same time, technically is also weak after last week also candle. So this would keep me or in favor to sell the dollar more than to buy the dollar, even on a retracement. So that's why in the morning, when we came in the morning and we saw the Japanese yen starting also the Japanese yen was very important, because last week the Japanese yen wasn't able actually to stay below the 109 for more than, it was just only a few hours, and now we have to watch the same levels once again. Last week it was like 108.60s and then spiked all the way in 3 hours. Now we have to watch the same area. Since the beginning of the day, dollar index has been declining. Everything was rising against the dollar since the beginning of the week. So now it is the time, which is like before. That's the end of the first session in the U.S. But we need to see the second session, or until the end of the day. Now Europe is about to close at the same time, which will be very important to keep an eye on, because most of the times, if Europe actually closed on a lower dollar, usually it continues until the end of the U.S. session. So we'll keep an eye on while we speak, also during this session. So that's for the U.S. dollar short and long term. On the longer term, still a positivity is there, but at the same time, I still believe on a monthly chart it is still DXY one more time. I still believe there might be more and more decline ahead, especially if it breaks below the 91. That would be a clear sign for another decline, or for further declines ahead. Okay, is that clear? Let me answer Mr. Homero. Sorry if I said it wrong. So his question is, if gold gets up, CHF gets down. So it's not actually just like what you said, but maybe I'm guessing that you or a little bit maybe bigger. But dollar Swiss. So gold has been going up for how long now? Let's look at the weekly chart. Okay. So that's the dollar Swiss. So the dollar Swiss has been declining. So the dollar is declining against the Swiss franc while gold prices is going up. So it is actually positively correlated, not between the Swiss franc and gold, not the other way around. So the chart that you can see now is dollar Swiss franc, the dollar against the Swiss franc. So declining in value means higher Swiss, lower US dollar. So that's why you're seeing right now gold is at session high. At the same time, if you look at Swiss franc, it's almost at session lows, or the dollar Swiss is at session low. Okay, is that clear for you guys? Any questions for now before we continue into our next subject? Okay, that sounds good. Fine. So that's number one. Number two, you have to understand also one thing, that for the past few, especially like 2 weeks from now, one of the things why gold, why dollar went down, and why gold went up, and most of the safe haven assets, including we were talking about Swiss franc, Japanese yen, and gold, silver, Japanese yen, and Swiss franc. One of the main reasons why these assets went up, it was because of the tensions or the geopolitical tensions between the States and North Korea. North Korea has said that they will strike the U.S. airbase in Guam in August. They haven't said when, but at the same time last week, and this is when actually if you look at the VIX chart also, I don't know if you know about VIX chart, but VIX is the chart for volatility chart, which, well, they call it some sort of like the fear chart. So at the beginning of August, when things started like to clear up from North Korea and saying that, okay, we will strike the U.S. Anytime in August. This is the fear index, which went up all the way from 9, all the way up to 17, which was also the highest level since when? Let's have a look. Oh yes, it was even more than that. Let's go for the daily. The highest level since almost 2016 in November. So this actually led for all global equities to go down, including Europe, US, Asia. We've seen, if you want to look at SPX, S&P 500. S&P 500 since then is declining, but not that much anyway. We're still looking kind of a retracement mode for the time being, but not. I don't think so. It's going to last for a long time. So political tension will always play a very big role in the market, more than any economic releases or more than any even economic event. Even with the Federal Reserve decision the Federal Reserve FOMC, but it came in within the tension. So that's why whenever there is like some tensions in the market, in some geopolitical tensions that might lead to kind of a war or conflicts, always try to avoid reacting to the economic data, because at the end of the day, what's going to happen is what the market think about this war or about this conflict. This will be reflected in the market more than anything else, or to reflect the economic releases. Okay, so that was last week. The tension has eased down. Most of the equities started like to rise just a little bit, not too much. However, earlier this morning, and this is one of the reasons why we're seeing the US dollar decline today, is that let's go back to 1 hour. Okay, is that North Korea threatened both the States and South Korea ahead of their like military drill today, which was actually today, and this was enough for the market to understand that the tensions are back to the market, and this is why at the beginning of the U.S. session we saw S&P going down. Also, most of the European equities, even DAX. If you look at DAX index, DAX 30, DAX 30. Okay, fine. I can't accept. Yeah, DAX 30 was also lower across the day. So even at the close right now, I guess we are down by almost 1% in DAX. For the time being, we are almost down by 1% at the closing, almost at the closing now. So this is one of the main things that you have to keep an eye on. So since the beginning of the day, we saw the news from North Korea, and it was like actually a minor. It was a very minor news. Like not all of the news bulletins has been talking about it, but this is big news for the market. So we had a red day in mostly in Asia, especially like Nikkei 225. We had also S&P Sensex. We saw a decline of 1%. All of the European equities are lower today. None of them are higher. And also the US equities right now is also lower at the open. And we still have to wait and see, but it's not that big decline. So Nasdaq is down like almost 0.5%. Dow Jones is unchanged right now, and S&P is down by almost 0.1%. But as I said before, the main thing to keep an eye on always is the political tension, and whenever it happens, you need to be sure that the political tensions and politics in general will have its impact on the market more than anything else. Okay? Going into our next subject, which is the euro, and why the euro, and why the euro, and why do you need to keep an eye on the euro in September. Anybody knows what's going to happen in September? Is there any event that we're waiting, or the global markets are waiting, or maybe at least Europe is waiting on in September? Nobody knows what's the event that we'll be waiting for in September? Okay, no one. Perfect. Germany. What about Germany? What about Germany? Well, what are we? Okay, the German election. That's right, Ahman, and that's right, also Homero. Okay, we will be waiting for the German federal election. This is what is it called, and it's going to be one of the most important, actually, the most important election in the history of Germany, because there's a little bit of change right now in Germany when it comes to the election. First of all, uh, this is the first election in Germany after the Brexit. That's number one. And this is the first election in Germany after the US elections, which actually both came in as a shock. First of all, nobody was anticipating Donald Trump to be the next president of the US, or the current president of the US. That's number one. Nobody actually anticipated to see any kind of like Brexit. The public polls over the past 1 year from these events were talking about, okay, the UK is going to stay in the UK, in the European Union, and Hillary Clinton will be the next president. However, both, I mean, both events came in totally far away from the market expectations, and also what's more important is that from the public polls, from the public polls. This is very important because right now, so the polls in the UK were showing more than 60% chance for the UK to stay within the eurozone, and they were giving at the beginning of the day of the US elections, Hillary Clinton had more than 70% chance to be the president of the States. However, at the end, it was a huge gap. Okay, now these kind of like fear from the elections has eased a little bit after the elections that occurred in France, which basically ended up with Emmanuel Macron to be the president instead of the far right candidate Marie Le Pen. Right now we have the same scenario. We have an election, and we have like many parties are coming into these elections, and it's going to be very interesting. First of all, the current polls. If we look at the current polls right now, you have more than 38%, 38.2%, pointing toward the Christian Democrats, which is led by Angela Merkel. And at the same time, you have the 23.9% for the socialist party, or for the what's called the SPD. There's a huge gap still between the 38.6 and 23.9. There's a very huge gap, which means for me that the possibility of a surprise is still high. First of all, you have also to understand something very important, that this would be, I mean, for the time being, at least the estimates points that the Merkel or the Christian Democratic Union party, in addition to its also Bavarian sister party, which is called the Christian Social Union, will be the largest party after the election if they made it to the parliament. But at the same time, they will still be short on majority. But this is very common in Germany, so you should not be surprised if there will be like no majority for Merkel. But that's why it's common, and the resulting parliament is in part determined by how the smaller parties perform and which coalition possibilities will be born. So that's totally fine. It happens, and that's totally fine. The only thing, or the only risk, would be if Angela Merkel failed to get back into the parliament, which would be the extreme scenario. But let's look at the euro now. So first of all, the euro started to rise from at the end of last year. That's one of the things, or one of the things that pushed the euro higher, because of one thing is the US dollar decline. That's number one. Number two, the estimates the estimates that shows that the Federal, or not the Federal Reserve, sorry, the estimates for the ECB, that it will start trimming its balance sheet, and which basically happened also in March, and that's why since then we have been rising. We had the gap over the first round of the French elections, and it continues all the way up toward 119. Now, since then, the euro actually declined all the way back from almost 119.07 all the way back to 116.90. That's a very what do we call it? That's a very normal retracement. But at the same time, this break above the 1960 was a very, or the 1690 was a very clear breakout, because go back into the chart, it was the same as or the same level that the euro tumbled all the way back to almost the parity back in August of 2015, and now August of 2017 we had a breakout, or sorry, July, I guess, yeah, July we had a breakout. Now we had just a small retracement to the downside to retest the former resistance, and then now the test has succeeded to push the euro higher. So the demand was also here, whether it was on the 8th of, or the 9th of September. We saw it also in 15th, we saw it on 16th and 17th, and even until today. And since then, we have been rising. And today, it was kind of a breakout all the way to 1850. For the time being, what you can see on the chart here, or at least from my point of view, I can see some sort of a flag. Okay, I can see a flag on the daily chart, which might possibly be, or this would be, the breakout. Now, what's going to keep the euro higher is two things. One, nothing new from the Federal Reserve and nothing new from the U.S. administrations. That's number one. Especially also that the U.S. administration has a lot of also political unrest inside the administration, because you have a lot of people like leaving the administration, and there's a lot of them resigned as well. In addition to that, as long as the polls continue to show that Merkel will be leading, the euro is likely to keep on pushing higher. So with today's chart here, I still believe that 119 would be very easy to be tested once again. However, I would like to see a break above that resistance, and if so, this would lead us to a notable rise, possibly even, because if you look at the chart here, there's no much resistance area before, let's say, there will be one of them here, which is like 121.70, and from that level, you'll have like somewhere around 122.70s. So this is the area that will be the target if we are interested to buy the euro. At the same time, the stop should be below last week's lows. That would be one of the trades that I'll be looking for in September, or over the next few weeks. 121.70s, 122.70s also in the euro. This would be my target, especially if we saw a break above the 19, clearly above the 19 at this time, which I still believe that's going to happen over the next few days. And with the stop would be somewhere around. So if you want to look at it on the long position, or like from let's say it's from here. So my stop would be somewhere around 116.05, but at the same time, my reward would be, I'll be looking for a reward of not less than number one here, and then, okay, hold on, let's add one. No, not that way. And sublimate one more time here. Oh, sorry, didn't. What happened here? Okay, so that's target number one. That's target number two. So risk reward, if you look at it, so we're talking about the stop is almost like 1%, but the reward is almost 4%. That, for me, that's a good risk reward. So his risk reward is like almost like 2.5. So for me, I guess that's a good thing. So that will be my next trade. But I just need to see daily close above the 18, as I said today. Okay, is that clear? Anyone has any questions for the time being? Go ahead. Okay, perfect. The next one. Let's have a look at gold. Next video. Let's have a look at gold. Gold is very interesting because we are actually stuck below 1300 since the beginning of the year. I mean, since the beginning of the year, we have been trading around. We have been trading around the. Let me put Orbix actually, because right now we actually did this a long time ago. Okay, that's last week chart. So let's take it off. So since the beginning of the week, or since the beginning of the year, gold has been trying to break above the 1300 many times. It tried to do so back in April and also in June. It tried that also even in July and now in August. Last week, which I don't like actually on the weekly chart, not that much, because it looks almost like the same one here, which led to another leg lower all the way back to 1227. But it's still not as bad as the previous stop, which is here back in June, which led all the way back to 1205. So for the time being, I would love to see gold. I would love to see a breakout in gold above 1300 over the next few days. But this still needs another catalyst. What I mean by catalyst here, we need fundamentals to jump in and give us more signs that gold is still need to go higher. If you ask why would gold go higher while everybody's talking about Bitcoin, I don't believe in Bitcoin as much as I believe in gold. Because there's a lot of people right now saying, listen, Bitcoin is safe haven. Well, let's assume that they are right. But tell me something here. Which safe haven asset that goes up and down by more than 150% in 7 sessions? So back in June, if you look at Bitcoin, let's just bring it. Bitcoin. Let's just bring it up very quickly. I just want to mention here, and you have to know such things. So in June, and if you look at the date, and I need you to also remember the date, on the 12th of June. On the 12th of June, this was the day when Bitcoin reached the $3,000, which was a record high back then. But if you go back into the news on the 12th of June, this was the date when we had the global cybersecurity attack, and they were asking people to pay them by Bitcoin. Since then, since that day, it lost more than 50% of its value, almost a 50%, almost a 50%. From let me look at it if we can take a change automatic. Date range, price range. Oh yeah, there you go. From 13, from 3,000 all the way to 1157. A safe haven would not lose as much as like 10-15% in almost a year, but not 38% or 40% in a matter of I don't know. It's actually more than. Wait, hold on. 3,000. Yeah, sorry, 3,000 to 1800. That's close to 50%. You lost 50% in almost, and if you look at it, how many days? It was just very few days. We're talking about like what, from June 12th all the way to the lows, July 16th. It was almost a month, 30 days to lose 100, almost 30 or 40%. That would be something that we don't call a safe haven. Safe haven is something or an asset that holds its value over time without losing that much of its value, just like gold, silver, and the rest. But also, look at it. So after the lows, we went all the way from 1883 all the way to record high, 143%. In how many days? Let's look at the data range, date range. So from the lows here all the way to we're talking about 32 days in 1 month. So the previous months you will go down by 150, and then the month after you go up by 100 and whatever. That's not a safe haven. So that's why, again, I don't recommend. And also, like for the past few sessions, it already lost how much? Let's have a look. I guess more than 5-10% maybe. Not 10%, I guess. There you go. Yeah, it's actually more. 13%, 12%. That's not a safe haven. That's not a safe haven. Okay, let's go back to gold. Sorry, I apologize for the screen here. That's something else. Okay, gold. Stabilizing from the beginning of the year, trading within a tight range. It goes up and down, but within a certain amount. We're talking about not even 5%. It was like up and down by 3% up and down the whole year. So right now, this is where you have to keep an eye on, is the 1300, because if it happens, that would be the clearest breakout of gold since more than a year. That would be the area to keep an eye on. Let's put this into, where is it? Okay, rectangle. Let's have a look here. And that's number one. Also, you can even add it to it, to the high of last week. That's why I like just to keep tracking on the areas that I'm watching. Once a breakout above that level, we'll be watching the 1317 and even above that. But here, a breakup above that resistance, we will see a lot of short covering from the people who are shorting gold. That's why I still believe there might be another leg higher. At the same time, my general outlook for gold remains positive as long as we are above the previous low, which is 1205. So here, of course, we're not talking about like risk reward ratio, but here we're still looking for another upside in gold. So we have almost like 3 minutes before we start like question sessions if you have anything. But I gave you the euro. I gave you also, there's one more thing also I need to talk about it. Let's look at oil. Oil is very, sorry again for this, yeah. Let's look at Brent. Brent, sorry. UK oil. So Brent crude oil, which is very important. We were talking about this chart also over the past few days. So Brent is now actually, or crude oil prices is also declining since the beginning of the year, even after all of the data, all of the numbers that that OPEC has been talking about. And this is one of the important things that I'm following. And here I'm going to show you a chart So who's following OPEC news? Let me ask you guys. Who is following OPEC news? And where is it? Yeah. Anyone following OPEC news? Okay. What's the latest news from OPEC? Sorry, OPEC production. So where is it? Total. So for the past few months, for the past 3 months, OPEC has been saying that there is like huge commitment from all of the producers, and that we actually very happy with the production levels. However, if you look at OPEC numbers, their numbers, not my numbers, their own numbers. So the cap, or the deal, was to cap the oil productions below 32 million. This is the 32 million. Let me just change it quick. There you go. And then let's just make it a little bit higher. Okay, there you go. This is the 32 million barrels. Okay, but for the past 3 months, the production is increasing. It is not going down. This is despite that they are saying that they actually cutting the productions, but it is not. It is going higher for the past 3 months. Why would Brent go higher if the production is going higher too? Why would Brent? Why would Brent even go higher if the production is going higher too? So this is for me one of two things: whether there is no deal, but they're announcing for a deal. I don't know. But can any one of you explain to me how we had like 3 months in a row that OPEC production is rising, and even right now the latest survey is saying that it might be even for the fourth month in a row all the way to 3.5 million barrels to be produced. Why would crude oil prices goes up if the production is going higher? At the same time, they're still saying that the commitment levels is higher and above 100%. This doesn't make sense. That's why you need to look into the numbers every now and then, especially fundamentals. Okay, so now we're still trading within a tight range since almost July, end of July until today, and there is nothing. So we had this breakdown last week, but it managed to rise all the way back up to 50. The minute it touched the 50 last week, it actually rised all the way back up. Low production in US maybe. Well, the thing is, why would it? I mean, the US is still pumping anyway, but OPEC or the US is not in OPEC. So even if my question is here, how the production is going higher while OPEC and non-OPEC members has agreed to cut the productions. This is one of the main thing. I mean, how? Why the production would go higher, while you had a deal to cut the productions? For me, it doesn't make sense. For me, it doesn't make sense. So I don't know if it does make sense to you guys, but it doesn't make sense. Anyhow, so right now, crude oil, I don't think so. We're going anywhere. Most likely it's going to be within a tight range, but what I need you to know here that OPEC will try as much as possible not to let the crude crash. So even if it goes down, they will always try like to send some of these speakers to the media and say we are meeting next month, whatever, to discuss the oil productions or whatever else. So keep an eye on oil. I don't think it's going to go higher anytime soon, but this is also my view on crude oil, as long as it stays below the previous top, which is almost around 54.70. Okay. I hope this is clear for you guys, and we will update you with the recent also trades on orbix.com website. If you have any questions, you are welcome to ask.